Gig economy platforms Upwork and Fiverr International have done well in recent weeks, their stock price regaining momentum. But which one of these two is the better stock to buy, Fiverr or Upwork? I'm going to evaluate and compare these two growth stocks across several critical financial metrics, including revenue growth, cash flow, operating margin, return on invested capital. I'm also going to look at and compare their valuations to determine which one is the better value at current prices, looking at the forward PE multiple and a discounted cash flow analysis for each Fiverr and Upwork before I come to the conclusion on which one I think is the better investment. So let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, looking at revenue growth over the last several years, we see a bit of a difference here. Fiverr was significantly better than Upwork during the earlier stages before the economic reopening. Revenue growth was more substantial for Fiverr, even growing at a single quarter upwards of 100%. Upwork, meanwhile, has delivered more consistent revenue growth, less volatile, less of a up and down, and in the most recent couple of quarters, has actually out-delivered Fiverr on revenue growth. Looking at cash flow from operations, we see similar story here with Fiverr taking a big jump upwards in 2019, 20, and 21, and continuing that trend upward here in recent years. A 21% cash flow from operations to sales is a huge improvement from negative 70% in 2019. Upwork, meanwhile, doing a solid job as well at 18.34%, the bulk of its increase happening here in 2024. Now, each of these companies has implemented cost-cutting efforts and a more focus on profitable growth rather than a growth at all cost strategy, and that has benefited both of them. As you notice, their cash flows have improved meaningfully in recent years, and similar story with their operating profit margins have improved meaningfully in recent years. Upwork is now positive on operating margin, almost 8%. Fiverr, almost there, negative 3% operating margin. I wouldn't be surprised if Fiverr turns profitable on this metric over the next 4 quarters, as the company has increased the fees it charges on the platform, which makes it more profitable. And to make matters better, Upwork has also increased the fees. So when you're an industry that's increasing prices like Upwork and Fiverr, it's beneficial for all industry participants because your customers look at that and say, well, you're raising prices. I'm not happy about that. And then they go look to your competitor, and your competitor is also raising prices. So then they say, well, all right, I guess I'll just have to pay because everyone is raising prices. I can't escape the price increases. That's similar in many industries, and you might realize that I like those kinds of industries for investment. Think about the streaming industry, right? Nearly every streaming provider is raising prices. Whether you look at Netflix, Disney Plus, Hulu, or whether you look at the live TV offerings of Hulu Live TV, YouTube TV, or Fubo TV, all raising prices, right? So for a streaming content subscriber, no matter where you look, you're seeing price increases, so you can't avoid it. That's good for investors. That's what's been happening with Upwork and Fiverr and other providers in this category. And that's one of the main reasons I've liked this category and why I've had both Fiverr and Upwork rated as a buy all year long in 2024. And I believe I've had them rated as buys all year long in 2023 as well, partly because of those factors. The return on invested capital also showing excellent improvement for both companies, although Upwork doing a little bit of a better job here since 2023. Their slope of improvement has exceeded that of Fiverr at 11.82% compared to Fiverr at 1.27%. Part of the reason why this performance has been better for Upwork over the last 4 quarters compared to Fiverr is that Fiverr focuses more on smaller businesses, smaller entrepreneurs looking to hire people for services, whereas Upwork caters more towards some of the mid-sized businesses, maybe some businesses that are looking to hire 10 contractors instead of just one contractor, or businesses that are looking to hire contractors for the full year instead of contractors just for one project or two projects, right? So Upwork caters more towards those larger businesses, and those larger businesses have done better in recent quarters, given that the increase in interest rates and a slowdown in economic activity has favored larger business compared to smaller business in recent quarters. The small business index has underperformed the larger business index over the last 4 quarters. Now, there will be fluctuations in this metric. Sometimes bigger businesses will look to hire outside contractors more so than smaller businesses. Longer term, while it'll even out, I think the smaller businesses will look to Fiverr and Upwork more so than larger businesses will. I think smaller businesses are more interested in hiring contractors than larger businesses are, because they can be more nimble, they can be more focused on specific projects, whereas larger businesses, they need to be more, they need to think more broadly, they need to think more larger. They can't be nimble hiring one person, letting go of one person, hiring for one project, right? The management capacity, they don't have that kind of management capacity to handle all of that increase and decrease in employees. So those are the factors I'm considering when comparing Upwork and Fiverr in terms of longer term expectations. Now, when I'm thinking about the future, I want to see the free cash flow estimates for Upwork and Fiverr. Comparing these two, you'll notice that Upwork is the larger company generating more revenue and more free cash flow. But Fiverr is expected to demonstrate similar growth in free cash flow as Upwork. And they're both not expected, as you can see from the bars here, they're not expected to grow free cash flow explosively in future years. So I would rate them slightly in favor of Fiverr when I'm looking at future cash flows, and a tie essentially, but slightly in favor of Fiverr in terms of future cash flow expectations. All right, so now that we've looked at the prospects, the historical numbers and the prospects for the future, let's look at valuation. And when measuring by a forward price to earnings, Upwork is a little more than 10% more expensive than Fiverr, trading at a forward PE of 13.8 compared to a forward PE of 12 for Fiverr. That's just one way to look at valuation. Another way to consider it is looking at the discounted cash flow analysis. And when I did this, intrinsic value per share for Upwork came in at $18.28 compared to a stock price of $16.58. So undervaluation is suggested with this calculation, and similar for Fiverr, although the undervaluation seems more extreme with Fiverr, with the intrinsic value per share coming in at $38.54 compared to a current market price of $32.26. That's even though the beta I utilized for Fiverr was much higher at 1.67 compared to the beta of 1.49 for Upwork. Even though Upwork had the better business characteristics, better cash flow, better operating margin, better return on invested capital, Fiverr had the better cash flow from operations, better prospects for few cash flow in the future years, ever so slightly. And then when we get to valuation, Fiverr was the cheaper stock, both on the forward PE basis and the discounted cash flow valuation basis. So while I like both of these companies, they're really close. This is a tough decision to make. I wouldn't be surprised if factors change over the next quarter or two and there's a flip between these two. But for now, if I had to pick one of these two as the better stock to buy, I would pick Fiverr as the better stock to buy. But I like both of them. I have them both rated as a buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.